What is up, everyone, and welcome to another Bitcoin market update. In these videos, you'll learn how to use technical analysis to forecast price movements in your favorite cryptocurrencies like Bitcoin, Ethereum, and others. So before we dive into the analysis, just a quick reminder that everything on this channel is for educational purposes only and is not intended as financial advice. Alright, so starting off here on the monthly time frame for Bitcoin, this monthly candle is going to close in 1 day and 7 hours, and really what we're going to be watching for is where this candle closes. So right now, after we've come down and set our higher low, we talked about up here, it's likely we're going to set a higher low because of the magnitude of this move, and this is no different on this rise in price. So because we rose so much here from September all the way to April, now when we come down, it's likely we're going to form a higher low, because for us to come from all the way down from 65K down to below 9,800 on one push would be a very significant drawdown, and it would take, a Herculean effort by the bears. When it comes to this move up, it's also very likely that we're going to set a lower high. And the reason is because of the magnitude of this drawdown. So whenever you're looking for where price is going to move, you should think about in relation to the previous high or low, the high or low, not high or low, the high or low most recent to the price action. So in this case, we have a high right here and we have a low right here. So in comparison to these two, where do we think price is going to go? Well, if we measure down from here to here, we can see we drew down about 55%. So for us to go up and form a higher high on the first push, we would need to go up and go about 126% plus, which is possible, but unlikely because of how significant that rise would have to be. So then we say, okay, it's likely we're going to set a lower high, and then we scout for where we think that lower high might come. If this candle closes with a short upper wick of profit taking, we'll likely see the next month come up and break the high of this previous month, this month of August, and that next month, September, might be the month where we actually set that lower high. If not, then it'll be the month after that in October. And I'm not ruling out the possibility that we could just go for a higher high, but it's more unlikely than it is likely, in my opinion. Good news to the bulls, though, is we have this increasing bull volume, so that will likely help the bulls break this high of 50,594 next month at some point in time. So let's go down to the weekly time frame and get a little bit more clarity. So the weekly candle closed yesterday, and you can see that we have our first bearish candlestick over the past 6 weeks. So we really had 6 strong weeks of bull action here, and then we had this spinning top bearish weekly candlestick here with some bear volume as well. So given that we had this rise in price for about, let's measure it, about 73%, we can reasonably say now that we have this bear spinning top pattern, or candlestick rather, and declining bull volume going into it, that it's likely we could see a drawdown to break this weekly low this week at 46,254 and then come down to form a higher low somewhere above the low that we set here on the 19th of July. So very similar to what we just did in the monthly time frame. We're looking at the magnitude of the move and then saying, because we've risen so much, it's likely we're going to set a higher low on a drawdown. So the other thing I wanted to point out was the pivots. So if we look at the pivots, we have closed now 3 candlesticks above the R2 pivot. So we pretty much invalidated that as a resistance zone. One interesting thing I'll be looking for is if the price comes down this week, if we can hold that R2 as support and then start to go up from there. That would be really good for the bulls to hold that level. If we go back below that and close 2 weekly candlesticks below it, it'll turn into a resistance zone again for price, even though it really hasn't held as resistance over the past few weeks. Well, not even past few weeks, the whole year. I mean, we've only went into it a couple times, but when we have, it hasn't done much. The R2 has not done much. So let's go down to the 3-day time frame. So from a 3-day perspective, we're really bouncing around in between two levels here. So if we move this red daily level out of the way, we can see two different levels here. We have the gray resistance level right here, back from March 2nd, and this is when we had our bull trend. So we had a low, high, higher low, higher high. We come into it, support, support, and then we break through it. Once we break through it, it's resistance. So you see that right here. We come into it, rejection, come into it, rejection, and we might come into it another time and reject off of it here if we draw down as well. So what I'm going to be, in the other zone here is the support zone. So this support zone is from a bull trend as well. So we have a low, high, higher low, higher high with 2 candle closes above the key high. And once we get that, we can take our rectangle tool, pull it over to the last down candle before that up move, and then that is our support level. You can see we come back into that here, we get a bounce, and now it looks like we're coming back into that again. So to set a weekly high, we're going to need to go below that blue zone, because if we go back to the weekly, we see that our low is at 46,254. So if we go to 46,254, well, I guess we don't need to go below the entire level. We just need to go below this low here from August 26th 3-day candle. So technically we could still stay inside that blue zone. So that might honestly be what happens. We might come down, go wick below that key low, and then come up and continue our bull trend upwards through this gray resistance level that we've been testing multiple times here. And that would only be the second test of this blue level. And, typically 3-day levels, like I've talked about before, hold for more than one test. So that likely will hold for a second test. So now if we go down to the single day time frame, now we can pull this red resistance level back. So, all right, so the red resistance level is a level that we've rejected off of multiple times as well, and that's weakening as well. So the resistance overhead is getting weaker. Every time we hit it, we're weakening that resistance. So we have 1 test, 2 tests, 3 tests, 4 tests, 5 tests. So we've tested it 5 times. So now at this point, if we go back into this level again, who knows if it's going to hold again for another test, because we've already tested it 5 times. So we need to keep that in mind. And if we do get a push above that zone and we close 2 candlesticks above this red zone, then it'll turn into support and give us a potential long entry on a retest of it. The other thing to note is the SuperGuppy, which is conveniently placed right below the low that we would need to go wick below to form that weekly high and then ultimately a higher low. So this zone, I really believe this is where we're going to form a weekly higher low, somewhere inside of this zone if we come down into it. So at this point, it's a matter of when are we going to hit these green EMAs for the first time. I think it's probably going to be this week. We formed them on August 18th, so it's been a while, long time coming for this trade. But once we get into there, then we can kind of make an entry, and then at that point we can just ride that that trade all the way up to however high we think this trend is going to go. But the nice thing about this indicator is it helps you ride a trend. It helps you participate in an uptrend or a downtrend. So you make an entry on one of the tests of the longer term EMAs. In this case, they're green. In this case, they're red. And you can see that, here's an entry here up at about 40,000, 41,000. And then you get a pretty quick drawdown on there after that. You could have just taken profits from there. But you could also then, add to the position here, add to the position here, add to the position here. And then you just continue riding that trend until eventually, obviously you're going to take some profits down in this range because you're up, a significant amount depending on where you had your entry. You're up, 20+% down in those ranges. So pretty good, very good in that sense. And then in this case, same sort of thing. We get an entry, and let's say we get an entry right around 46,000. So if we got an entry right around 46,000, even if we only went up to the previous weekly high here, we would make about 10%. If we go above that gray level, then we make about 15%. So that's already, that's a really good trade over a short period of time. And that's on spot. So, if you're trading this on leverage, that obviously would be much more. So that's something I'm keeping an eye on. The other thing I'm keeping an eye on in the daily time frame is this gradual progression where the Ichimoku cloud may end up flipping bullish here. So you can see the cloud has started to get closer and closer. It's smaller and smaller rather. And once it flips to be green, and then we get this Tenkin, the blue line, and the Kijun, the red line, to cross above the cloud, then we'll be in the most bullish scenario for this. And this is a strong trending indicator as well, similar to the SuperGuppy. So once we see that, that'll give us confidence that we can see higher prices thereafter. But this is like I've talked about back here when we started looking at this. I mean, we've been looking at the Ichimoku cloud. I mean, we talked about this edge to edge. But in this range, once we got above the cloud, we're really watching to see that pattern play out. And I said it's going to take a while for that to play out. So we're still keeping an eye on that. All right, let's go down to the lower time frame. We're looking at the 6 hour here. So from a 6 hour perspective, we can see that we still have not crossed above this yellow resistance zone that I've talked about being the main resistance zone. I talked about this back here on August 24th or 25th and said now that we've confirmed that bear trend, right here you can see we have a high, low, lower high, and then lower low. Once we confirm that trend, now this last white candle before the down move, the last area where people were buying Bitcoin, is going to be the area of resistance. We come into it here, perfect rejection off, come into it again, rejection, rejection, rejection. So now we've tested it once, twice, 3 times, 4 times. So, if we come up and test this again, we might not hold this level again. I mean, it's a 6 hour level. It's not like it's some... it's not like it's a daily or 3-day level. This is a 6 hour level that's holding for 6 consecutive tests. So we will need to, we will break above this at some point. And when we do, because we've tested so many times, when you have a level like that you test so many times, when you do go above it, these are typically the levels that once you close 2 candlesticks above it and retest, they get a nice pop thereafter. And the reason is because everyone sees the price action. Everyone sees that we've rejected off of this, 4 or 5 times. And so once you go above it, the first retest of that is a simple, support resistance flip trade. So that's something that I'll be keeping an eye on Bitcoin. And that's really all I got for this one, guys. If you like this video, give it a like down below and subscribe for future educational content around cryptocurrency and blockchain technology. And if you haven't already, join our Leutheria Telegram channel. This is where you can join people from around the world discussing cryptocurrency related topics. And we have people in there from over 14 countries now. Very happy to say that. I love the eclectic group of people that we have in there. We have weekly community audio chats where we discuss a variety of crypto related topics that people in the community suggest. And we do those every Sunday. So check that out. It's free to join. There's a link to do that in the description below. And until tomorrow, onward and upward.